Right now, somewhere in the United States, millions of dollars are quietly losing value, not because of bad investments, but because they're sitting in savings accounts that barely pay anything at all. Most Americans think a savings account is just a safe place to park money. But in reality, the right account can actually work for you, earning real returns every single month without taking on risk. In this video, I'm going to show you the best high-yield savings accounts in the USA right now, what makes them different, how much they really pay, and how everyday Americans are using them as a simple, low-stress way to grow their money in the background of their lives. By the end, you'll know exactly what to look for, what to avoid, and how to choose an account that fits your financial goals, not just a bank's marketing. Why high-yield savings matter. A traditional savings account feels safe, and in many ways it is, but safety without growth can be a silent problem. When inflation rises faster than your interest, your money is technically shrinking, even if the number in your account stays the same. High-yield savings accounts were designed to solve this exact issue. They offer significantly higher interest rates while still keeping your money accessible and protected. For many Americans, this has become the middle ground between doing nothing and taking on investment risk. Instead of letting cash sit still, these accounts allow it to move forward slowly and steadily, month after month, without you needing to check the market or stress about timing. What makes an account high yield? Not every bank that claims to offer high interest actually does. The term high yield usually means the account pays many times more than a traditional savings account. The key number to look for is APY, annual percentage yield. This tells you how much your money can grow over a year, including compounding. But APY isn't the only thing that matters. You also need to look at fees, minimum balance requirements, how easy it is to move your money in and out, and whether the bank is insured. A great account doesn't just pay well. It fits into your life without adding friction or stress. Category 1. Online banks. The first category is online banks. These institutions don't have physical branches on every corner, which allows them to save money on overhead. Instead of spending on buildings, they often pass those savings back to customers in the form of higher interest rates. Many Americans now use online banks as their main place for savings while keeping a traditional bank for everyday spending. The biggest advantages here are usually strong APYs, clean mobile apps, and fast transfers. The trade-off is that you won't walk into a branch if you need help. Everything is handled digitally. Category 2. Fintech platforms. The second category is fintech platforms. These are technology-driven financial services that blend traditional banking with modern automation. Some of them offer features like automatic savings rules, roundup programs that move spare change into your account, and real-time interest tracking that shows how much you've earned today, not just this year. For people who like seeing progress and staying engaged, these tools can turn saving money into something that feels active instead of passive. How to compare your options. When comparing accounts, it's easy to focus only on the highest number. But the best choice often comes down to how you actually use your money. If you move funds often, transfer speed matters. If you keep a high balance, minimum requirements and tiered rates become important. If you like simplicity, a clean app and clear statements can make a big difference. The goal isn't to find the best account on paper. It's to find the best account for your habits and your lifestyle. Common mistakes to avoid. One common mistake is chasing the highest rate without reading the fine print. Some accounts advertise a high APY but only apply it to a small balance, or only for a limited time. Another mistake is ignoring access. A great rate doesn't help much if it takes a week to move your money when you actually need it. And finally, many people forget to check whether their account is fully insured. Making sure your savings are protected should always come before squeezing out an extra fraction of a percent. Simple 7-day setup plan. Here's a simple way to get started in the next 7 days. On day 1, list your current savings accounts and their interest rates. On day 2, compare at least 3 high-yield options. On day 3, open a new account. On day 4, move a small test amount. On day 5, connect your main bank. On day 6, set up automatic transfers. And on day 7, step back and let the system work. Saving doesn't have to be complicated. Sometimes the smartest move is simply building a better place for your money to sit.